Hey, Bridget, this week, President Trump in the White House announced plans for a 50-year mortgage to replace, or I guess in addition to the 30-year mortgage being the long-term option today. I've done a little bit of digging into it, but I'm really interested to find out what you have to think about this. Have you paid attention to it much at all, or done any math yet?
I haven't done any math, but we're really familiar with mortgages, so I think we can speak to this and about what the pluses and minuses of this could be. All right,
Yeah.
so let's start with the first big plus. All right, we like mortgages for their inflation protection. So that means you buy a house; it's at whatever it is, might seem expensive, right? And then you get your monthly payment, and then the only possibility for that is for it to go down. So as inflation goes on, you keep that same amount and it starts looking cheaper and cheaper.
Yep.
I think you've beneficiary of that right now because you bought a house a long time ago.
I did.
So now it's interesting because we've been talking about mortgages, 30-year mortgages and inflation protection for all those years where there really wasn't much inflation. And so we didn't really get any people know what we're talking.
Yeah. Yeah.
And now it's like, oh, I get it. I get it. So with a 50-year mortgage, it's really going to help with that situation.
It sounds like your initial reaction anyway is pretty favorable towards those longer mortgages. It's interesting that despite the fact I have I have two 30-year mortgages on the two properties that I own, and I believe in them. My initial reaction was more negative, but I do agree with it. Like I said, hey, that inflation protection is a great deal long term. The other thing, and it's kind of tied with that inflation protection, but I think you alluded to it, is that as I look at it, it's the only place where the little guy has a leverage over the bank is a long-term mortgage. And what I mean by that is that the bank can never change those terms, assuming that the terms would be the same as the 30-year mortgages are, right? The bank is agreeing that here are the terms, and we can always pay it off early or pay more on it or whatever, right? We can't pay less, of course, right? But we've got flexibility. We inherit a bunch of money. I can pay the house off if I want to, or interest rate environments change and I can pay the house off if I want to, but they can never go the other direction, right? And you think about what happens in this inflation protection that you're talking about. Let's say the rate on a 50-year mortgage is 7% or something like this. Well, if inflation goes way up, I mean, you and I both were in the work world when CDs were paying 8 and 9 and 10% interest, right? If I'm getting not 10% on a CD and I'm paying 7% on my mortgage, golly, I'm pretty happy about that. I'm in no hurry. You think about what that means from the bank standpoint. They're giving out money. They've given me money at 7%. They're making 7% over here. But in order to get deposits, they're paying 10%. Right? I mean, they're behind. It's the one place where regular people have an advantage. So for those reasons, I mean, that's no different than the 30-year, right? And it just stretches it out, gives you a little bit more power. I like that side of things. I guess for me, one of the big things that I'm not as excited about that is as it stands, most people don't live in their houses like I do. I've been in my same house for coming up on 30 years here, and but most people move. I don't know the statistics every 7 or 10 or some shorter number. So does it give you some leverage against inflation? Oh yeah, it does. But most, I'm a little bit different than the typical person, right? So even though I could get a 50-year mortgage, if I'm going to plan to move every 5 to 10 years, does that really give me that advantage? I'm not sure that it does, right?
Yeah. And the other thing is, I think the big downside is that it's going to take you forever to build up any equity, you know,
Yeah, right.
just like, so the equity in your house, if you actually end up wanting to move or something like that, you're just not going to have that much there. And I'm not that huge of a fan of like thinking about houses as an investment, but they are a big part of people's net worth. And
Sure.
so you're saying like, okay, this is a part of my net worth that's just going to kind of take forever to grow. So
Yeah,
that
and you think about right if the value of the house goes up, that doesn't matter if you have a
is
mortgage or not, but that those mortgages are so front loaded with the interest payments all come up front, right? That you
right.
just again, not a big deal in most cases, but you start to push it out farther and farther, and again, if people move every 10 years, let's say, that puts you behind a little bit on things, right?
Mhm.
Um, you know,
Yeah. So it's like, I think in some ways, there's a lot of people that think about income inequality, wealth inequality in the country, and they say that part of the reason is because of the housing market and the availability of 50 years mortgages. I think would make it worse because
how
I think
so? What do you tell me about
people
that?
will be building up less wealth in from their house. These houses are really where people, like the average person, builds up a lot of their wealth. And if you're going to build up less wealth if you have a 50-year mortgage.
Well, I'm going to take the other side of that one. And
Okay.
I hear what you're saying as far as if you think of the mortgage pay down and the building up
Right.
of wealth by paying down the principal, that's 100%. I mean, it's math. You can't argue with that.
But if
I would
yeah,
I
the
would
principal.
argue though that how much of a person's wealth as it stands right now. So take a look. Most people move again. There's some statistic every 10 years. So you look at the first 10 years of a mortgage schedule, and you're not paying down a whole lot of principal on a relative basis.
Yeah.
Where does the wealth get built? Is my $400,000 house is now worth 500,000. I've got 100,000 of equity if I've paid off zero. If I got an interest only mortgage, right, and my $500,000 house then goes to 600, now like that appreciation side of
Right.
things, I think would still be
Bigger part. So you
relevant.
feel like, yeah, your thought is that the appreciation is a bigger part of the wealth accumulation than paying off the principal, a little bit of the principal every month.
Yeah, and absolutely. I think you think about again, if your $500,000 house goes up by 5%, that's $25,000 more equity next year for doing nothing, right? Regardless what you pay down. I don't, if you have to look at the scales or the payoff schedule, but you're not putting $25,000 of equity in your payoff on a consistent basis until very deep into that mortgage, right?
Right.
The other thing I thought you were going to go to with affecting wealth inequality and just making it affordable. Like the news that this week has been about they'll make things more affordable because if you stretch out your payments over 50 years, your payment is lower, right? I mean, there
Right.
again, just math, that payment's lower. However, I think that the evidence really shows it's not the payments necessarily that are the issue. It's a supply issue, right? I
Right.
can afford a house, but I saw something earlier this week that said there's something like a million fewer houses than are needed in the United
Right.
States in order to supply to fulfill the demand, enough supply for the demand, right there. So I mean, basic economics, it doesn't matter what the financing side of things are. If there's not enough to go around and people can afford now to buy more, does that just drive the prices of all these houses up, and then it makes it even less affordable for people that can't buy today, right? I don't know that it solves the problem. It sounds good, but it seems like it's maybe lipstick on a pig sort of a thing.
Yeah, I talked to a realtor this week who was talking about the low inventory and how they haven't been building enough in Chicago. And I remember almost going back 10 years talking to someone who works in the railroad industry about, and they were talking about how they weren't shipping lumber, the lumber numbers were low. So this
Yeah.
problem goes way back. It's like the post 2008 recession problem because people stopped buying houses because there was so much there were a lot of people underwater. There's just a lot of things needed to be worked out in the housing industry. And so all that lack of building has now really come back to haunt us.
Right, yeah, people stop buying and then builders stop building, and it just
Right.
hasn't ever caught up on the other side, right? So
Right.
it's one of these things that, and like a lot of issues in the financial world, right? It sounds like a good idea to do one thing, but you got to look at those underlying causes and and the other thing too is that you have to look at the cause and effect, right? This isn't something, here's an idea that comes out. I don't, maybe it's reasonable to consider, hey, let's look at this, but the idea that we're going to go and push something out without looking at all the potential sides of it, right? Looking at all different facets, as we've just
Right.
talked here in a few minutes, right? Hey, some potential upsides from a not from an affordability standpoint, even, right? From the idea of, hey, this makes sense financially speaking, gives us even better longer term protection against inflation, right? Gives us
Right.
leverage over the bank. We can, and if interest rates drop, we refinance, right? So
Right.
we can
We have
we can
lower
go
payments,
lower on that, right?
better inflation
So
protection. Right.
yeah, so there's a lot of good things, then there's also these other things you go, oh, wait a minute now, geez, if I move every 10 years, I don't reap that. And am I paying down anything as much of the mortgage? And we didn't even talk about here, if we're going to have a longer mortgage terms, probably we're paying a little bit higher interest and a
Right.
lot more interest over
A
time, right?
lot
So
more interest over time. Right.
right. And so it's like, it's got potential, but I just don't see it. I'm certainly not excited about it right now. And I think there's a lot more potential downsides than there are potential upsides.
Yeah, well, the other thing is that I think that it's going to be a while before anything could happen because there's a debate about whether they need to repeal a particular law or if the regulators can just do it by fiat. And uh, in those situations, that tends to mean they got to go to court. So,
Yeah.
or because of course, unless the legislators want to act. So, that'll be interesting too. But again, so it doesn't sound like it's going to happen anytime fast.
Yeah. Yeah. But it'll be interesting to watch. We'd love to hear what you think about these things. Jot a comment in the comment box. Let us know what your thoughts are on a 50-year mortgage. Would you buy one? What are the caveats? How are you feeling about this? I'd love to have some interaction on that. And with that, that's a great place to wrap things up here. I'm John Shear. I run a family financial planning practice in Middleton, Wisconsin.
And I'm Bridget Sullivan Mermel. I've got a family financial planning practice in Chicago, Illinois. John and I are both taking new clients. You can reach out to us if you're interested. If you are living in a different part of the country besides Chicago or Middleton, and you're looking for an advisor in your area, you can check out acplanners.org. It's an organization with a lot of people in it that think like we do.
And help other people find this on YouTube and hit that subscribe button.